Folks, right now, as the market is handing you something rare, 5 AI companies, all under $5, real revenue, real technology, real catalysts, and prices that look like the market has completely given up on them. But here's the thing about markets giving up: they are sometimes right, and sometimes they make a very serious mistake. Today, I'm going to show you 5 specific setups where the gap between what these companies are building and what their stock prices currently reflect is so large that every serious investor needs to understand what is happening right now. Number 5 to number 1. Every single stock gets more compelling as we go, and number 1 today has a director who walked into the open market and bought over 1 million shares with personal money, and the stock kept falling anyway. Stay until the end, because the most important stock on this list is always last. So if you like finding setups like this before the crowd, hit subscribe right now and turn on notifications. Let's aim for 500 likes so more people can benefit. And remember, this is for educational purposes only. I am not a financial advisor. This is not financial advice. Always do your own research before making any investment decisions. Now let's get into it. Now let's talk about stock number 5. And this one is a transformation story hiding in plain sight. This company has been around since 2000X for most of its life in what it was known as one thing: a video platform, enterprise video, education video, media streaming, steady revenue, real clients. But nothing exciting. Then the AI revolution arrived, and this company made a decision. They stopped calling themselves a video platform and became an agentic digital experience company. AI-powered avatars that do not just display content, they engage, they sell, they train, they drive entire buyer journeys from first contact to closed deal. Just this week, they unveiled an avatar-powered role-play solution for enterprise training, where employees practice real conversations with AI that responds like a real human. They completed a major acquisition, combining buyer intelligence data with their avatar technology. Revenue in 2025 at $180 million. Losses down 61% year over year. Expanding across Europe, Asia Pacific, and Canada right now. Analyst price target, $3. Stock today, $1.49. That gap, over 100%, is the setup. The company is Kaltura Incorporated. Ticker, KLTR, NASDAQ. Now hold on, because the next company went from AI retail checkouts to something that 30 million people interact with every single day. Now let's talk about stock number 4, Serums. And this one is already inside businesses you visit every single week. This company built a mobile-first generative AI platform. One-tap checkout, AI-powered, works inside apps and browsers for global enterprise retailers. But the real story is what they are building next: conversational commerce. The ability for consumers to make purchases through natural conversation with AI. No apps, no menus, no forms, just speak, and the transaction completes. Revenue is growing. Losses are narrowing. The company went from almost nothing to a recognized product inside major global retail ecosystems. And then, in March 2026, they added 20% in a single day, when the market realized revenue was growing while losses were shrinking at the same time. That is the classic turn the corner signal. With voice commerce moving from pilot to full production this year, a completely new revenue stream is turning on. Stock today, $2.85. The company is Resolve AI, ticker RZLV, NASDAQ. Now get ready, because the next stock has something most companies never achieve: a government weapon contract. Already received, already funded. Now let's talk about stock number 3. And this one has a catalyst that most people completely missed. This company started in laser technology, industrial blue lasers for EV batteries, medical devices, and precision manufacturing. Then they looked at the biggest threat on modern battlefields: drones. Small, fast, cheap, deadly. And they said, we already have the technology to stop them. They acquired a European defense firm focused on one thing only: counter-drone directed energy weapons, a portable laser that destroys a drone in seconds. On March 31st, 2026, the first government deployment order arrived from a Tier 1 defense partner: $250,000. First real defense revenue. $24 million cash in hand, 17 million in debt eliminated, European acquisition pending, earnings May 18th. And then, just days ago, the company's own co-CEO bought shares personally on the open market. Executives do not buy their own stock when they think the price is going down. They do it when they believe something is coming. Stock today, 28 cents. 52-week high, $4.24. That is the same company, at 15 times less, with more cash, less debt. First government contract received. The company is New Buru Incorporated, ticker, Buru, NYSE American. Now, two stocks remain, and both of them have earnings coming in the next 2 weeks. But number one has something number two does not. An insider who made a bet so large that it cannot be ignored. Quick reminder, everything in this video is purely educational, not financial advice. These are all high-risk speculative stocks. Always consult a licensed financial advisor. Now let's finish strong. Now let's talk about stock number two, and this one is a Yellow Pages company that rebuilt itself from scratch. This company started in 2012, not as a software company, as a Yellow Pages business, print directories, local advertising, phone books. Everyone assumed it was dying, and it was. But this company used the cash from the dying business to fund an entirely new one. AI-powered software for small businesses, scheduling, CRM, payments, marketing automation, all in one platform. Then, in late 2024, they acquired a sales and marketing automation engine with its own large customer base. Software now represents 60% of total revenue. SaaS growing 35 to 38% year over year. Gross margin, 67%. Positive earnings per share, 51 cents. New board member just joined from one of the most successful small business software companies in America. Earnings April 30th, days away. Simply, Wall Saint estimates this stock is trading 82% below fair value. Average analyst target, $14. Some targets as high as $21. Stock today, $3.32. That is a gap of over 300% between today's price and where analysts believe this stock belongs. The company is Thrive Holdings, ticker, THRI, NASDAQ. Now, one stock remains. Number one. And this one has an insider signal that is impossible to dismiss. A director, not a retail investor, not a social media influencer, a director of the company itself, walked into the open market and bought over 1 million shares with personal cash, and then the stock kept going down, which means today, that director is sitting on a loss. But directors who buy 1 million shares personally are not making impulsive decisions. Now let's talk about stock number one. And this is the most compelling setup on today's entire list. This company was founded in 2013 to solve one of the most expensive problems in the legal industry. When companies face lawsuits, lawyers must review millions of documents, emails, contracts, files, communications. This company built AI software that does it faster and cheaper than any human team ever could. Revenue, $156 million. Gross margin, 74.8%. Cash, $114 million, almost zero debt. Beat earnings expectations by 55% last quarter. New senior executive joined this week. And then, Director Robert Goodman bought 1,026,000 shares on February 27, 2096. Personal money, open market purchase. That is the single most powerful insider signal a company can send. And yet, the stock has kept falling since then. Competition concerns from a new AI legal startup entered the market, but the director has not sold, which means the conviction is still there. Analyst target from Needham, $10. Canaccord, $6. Current price, $4.36. Earnings May 6th, days away. If that earnings report delivers, the setup that director positioned for could finally show up. The company is CS Disco, ticker, law, NYSE.